What's up YouTube, it's Louis here, hope you're all well. Today we'll be looking at Quant on the daily time frame, but first of all, heading over to my Twitter, I made a post saying Quant is forming a small inverse head and shoulders over here. And if it does actually break out and meet its target is around 150, 160. If it doesn't meet its target, that target is actually to where this golden pocket is. So just hammer it back down afterwards, because what we've had is essentially this big push down. And so we're retracing back up into it. This retracement will be carry on if we break above and validate this inverse head and shoulders. But once you meet this bullish pattern within this newly formed downtrend, you're going to run into key resistance, and once the pattern has finished, you continue in the direction that you were in already, so down. So push, exhaust, continue back down to this key resistance. We'll get into that right now, but yeah, head over to my Twitter to follow. Almost at 1.7k. Let's try to get to as close as that as possible over the next week. Louis_crypto. I've also got a giveaway happening right now for hitting 4,000 subscribers. So thank you guys so much. Of course, always helpful with the algorithm by liking, subscribing, commenting. If you want to send in a super thanks, please do so. Also with the thanks, you can request a chart as well. And if you're a channel member, you can of course request a chart video. So yeah, one free course. You just need to of course subscribe over here, follow over there, like and retweet this, and then comment down below, and the winner will be revealed over the next week or so. So let's head into Quant right now. We'll go into that inverse head and shoulders, which we are seeing, but at the moment we actually haven't closed above the neckline. The neckline is the 200 EMA as well as $122. If we're seeing a daily candle close above that, it's going to signal that we're going to see this push into this, of course, big area of F off resistance, guys. There's so many boxes for days. So although it's right for us to be calling for this inverse head and shoulders, we need to realize, so we had this descending triangle, we had a higher low over here, we're forming these higher lows, so we need to continue, but we lost it. So we already created our first lower low, ran into it as resistance, continued, lower high, lower low, even lower than this, but essentially if we're coming back up to here, it's a previous support, so it's now resistance. So I need to see that actually reclaimed. So in that post over here, only way for Quant to actually flip bullish is a close back above 169, which is your neckline over here, and to close above the to close above the 786 fib at the 188. So let's just double check this. There we go. So yeah, here's your golden pocket. I know it's a bit messy now. Let me just get rid of these. But yeah, you can see the 786 at about $188. And so if we're closing above that, it's going to start this journey back up to 232. But that's not what I believe is going to happen. Of course, it can definitely happen. But for me, the reality is I just see too many walls ahead. It doesn't mean that it can't go through it. Of course it can. But I don't know if there are any fundamental things around the corner. Let me guys know in the comments down below if there is something that could push this up. But for me personally, because we have such a big push down, it's not expected to just reclaim it with such ease. So if you were to actually go all the way up there, you're going to first run into this. So you need to get rejected. You need to pray that we reclaim this $120 support. That's a high chance that you could do that, because if you are actually to break above this, you're going through it. So it's no longer holding as resistance. If we ever come back to it, it should be support, but we need to see if it will, because this is such a big dump down. You just retrace to continue. It's something against it's a higher probability that it'll go down, but yeah, it can most definitely catch support here, but then you have to run into the next resistance. Do you understand? There's just a lot ahead. And even if you do get up to the 786, it's still a wall, a resistance. So you need to get above that to then go up there. So there's a lot of work to do going forward, but I'll be here step by step, and we'll zoom in a little bit more, but there's not much more to say. So yeah, the fib tool is a retracement tool. This is a push, retracement, continuation. The fib tool is just telling you where you're coming to. Where should we enter a short from? Where are we going to find resistance, key resistance? And this is the most likely area. It doesn't mean that every time it will go there. You can just stop at the 382, which we've already tapped twice now. I will get rid of this for now. You can actually see on this line, exactly. Apologies guys, the video keeps cutting out. I probably need to restart my laptop. I never do. Anyway, we're talking about the 386, which is at 125. If you remember correctly, over the last few days we've been talking about that, how the every $25 will be a key resistance, just a psychological level. So 100, 125, 150, 175 and $200. These are all going to be key resistances. But yeah, we got the 382 lining up with that specific one, 125 and 120 down here. So I've drawn a red box for you. And so you don't actually have to go beyond the 382. You can just run into it and then continue lower. However, I just must say that we do have a bullish pattern here, the inverse head and shoulders. So if we do see the close above, let's just say 126 on the daily time frame, then yeah, we are going to continue into the golden pocket. But yeah, key resistance already down here between 130 and 140, the 20 and the 55 EMA. It needs retesting. Ever since spiking down here, you can see we were overextended from the EMA, so price needs to come back up in towards them. Apologies for that. Yeah, so but just I'm expecting us to get hammered back down because we need to reclaim 168 and 188 if we want to have chances of heading back to the high. But again, that's another key resistance going forward once again. So yeah, a lot of work for this to head back up, but it's definitely possible, but it's not my expectation. I'd love to be caught off guard. Please do that. I would love to, because I do want this going up. It's just I'm not going to be disillusioned to what's ahead. What should happen is after such a big push down, you exhaust, and that's what the whole point of the Fibonacci is. It's called a Fibonacci retracement tool. So we found a bullish pattern, correct, but the big move was down. So when we're in a downtrend and we see these bullish patterns, it means that yes, they can work, and we've found where this is actually going to take us to, but they work in the short term because we're in this bear trend, because we've just started this big push down. It means that yes, there's bullish patterns within, but once you come up and meet the targets, which again, the target is between 150 and 160, and that is within this golden pocket. So that is key resistance. So even though you might meet this pattern's target, you're just going to get hammered down, in my opinion. You can find support somewhere else. Again, over here, you can find support 386, 125, 120 to 125. So something like this. And then if we were to reclaim again, we need to do something of that sort. But yeah, it's against what should happen. You've had a big impulse down, you correct back up, which is your exhaustion phase, refueling the rockets before continuation back down. And once we get this push up where we actually recognize we're finally dropping, I'll get the fibs from the low to the high. Right now it's at the 386, but I do believe we're going to potentially go higher because, well, we just need to wait for a daily close above 122 and 126. That's going to signal, okay, you validated this inverse head and shoulders that we see down here. And our target, and there's two. You can take your conservative one because we're in this, well, you just started, you have a low over here, lower high, lower low, lower high, lower low. So, or you can just say low, lower high, lower low, lower high, lower low. Either way, it's going to be a tough journey back up if you want to switch the trend. But yeah, you need to see a higher low. If this does validate, we can see the target over here, 150. We'll just say more aggressive targets. If you take it from down here, that would be a target of about 170, but it's all key resistance because as I just explained, you've got these lower lows, lower highs, and this is going to go against this short-term trend at least. Then I would believe that you'd take the conservative target because it's against the trend. If we were in this if we were up here and we see this inverse head and shoulders, we're keeping this bullish structure. There's nothing bearish, so I would just take the target down from the wick. I might be wrong, that's up to you, but either way, this is just all key resistance. Regardless of whether the target's from down here or just from here, you're going to run into this. This is resistance. I expect us to go lower from here. You can find support here. If so, you need to break above, again, the key resistance to head higher. I'll be here along the way. We'll take it step by step. Please like, subscribe, and comment. Don't forget to enter the giveaway here. It's free over on my Twitter, Louis_crypto. Help me reach